You guys like cryptocurrency? Yeah! Cool. I've been involved in this industry since 2015, trading cryptocurrencies. I've been trading longer than that, but involved in cryptocurrency since 2015, and I can tell you guys, it's been a blessing for my life. You guys heard earlier Rob Frasca with Endow, right? Okay. He talked a lot about the future of blockchain, the future of this technology, and honestly, I don't think most of you realize how early on you are. Okay? You see the price of Bitcoin, and you think, oh man, I'm late to this game, right? Because for most people, it's a big number to the average person, right? The value of one Bitcoin. But understand, the only reason the value of one Bitcoin is so high is because there's eventually a max supply of only 21 million. Okay, everything's supply and demand. Okay, that's how the world works. The reason our money is always depreciating, right, is because they print more money, correct? The more of something, the less valuable it actually becomes. Okay? Give you a simple example. You good?
We had a phone lost.
No, I gave it to them. They took it. Yeah.
Your phone is lost, brother.
Yeah, it's gone. Sorry. It's right there. All right. So what I was saying, give you an example to make this very, very simple to understand. Let's say a pair of sneakers goes on sale, okay? And that sneaker sells out very quickly, right? And you can't get that pair of sneakers. People sell them online for 3 times the price, correct? Same thing, we saw it with video game consoles the last couple years, right? You couldn't get a PlayStation. Oh my God, look, supply and demand, right? That's how the world works. And it's everything. That's what most people don't understand, okay? But that is money, okay? What I'm gonna talk about today is teaching you guys these simple principles that will put you in a position to win. I'm gonna give you a quick overview of the market just to show you where we're at today. Some of you guys have been with me over the years, right? And you've seen these things progress when I talk about them. We do a lot of trading. You guys know I do a session every single Monday at 11 a.m. and every single Wednesday at 7 p.m. You guys know that, right? Yeah. For iGenius members only in Learn Live, okay? And guys, when I call out trades, you guys know I don't trade to trade. I trade to make money, okay? Some of you guys like to call a signal daily. I don't call a signal daily. When I see something there, we're going for this. This is a setup that I'm not trying to, oh, okay, let's see if this one works. No. We got good information before we execute on it. Does that make sense, guys? Okay? And that's a problem with traders sometimes because they're just trading. Some days, hey, it's better not to trade today. Take a break, sit down, okay, ride this one out. But I'm gonna go through the market with you guys, break down where we're at, what's currently going on. You guys can see Bitcoin's been dumping today. We're at 23,000 right now. I'm gonna show you what's going on, what you should be looking for in the overall market. I'm gonna also update you on the Coinbase trade. We're all in. For those of you who've been following that, we bought it at $40 a share. We took out all of our initial profit at $80 a share, and you guys will see I was right on point with those numbers. It went to 80 and came right back down. But that all being said, we took out our initial capital, so now we're just playing with house money in that trade, so we really don't care. We're gonna let that one ride long term because Coinbase is probably the biggest crypto company in the world, market cap wise. That's a publicly traded business. So we're excited about that one long term, and a couple other updates, some sneaky little fun things I'm gonna show you, okay? So let's look at this real quick. I'm gonna reload this so it's all real time. As you guys can see, the cryptocurrency market cap is coming in a little over $1 trillion. A little over $1 trillion, almost $1 trillion, half, right? Not $1.5 trillion, but $1.57 trillion, right? Okay? This is the total volume of the whole industry. I want this to make this how crazy this sounds real quick. The whole entire cryptocurrency market is $1 trillion industry. Do you guys know how small that is? Okay, Apple is one company. Their market cap is $2.4 trillion. You guys don't believe me? All right, here we go. Apple market cap, here we go. Oh, 2.3, it's down a little today, okay? It was at 2.4 last week, okay? 2.31 trillion. That's one company that's on the NASDAQ. Do you guys understand how early you are to crypto? Okay? Very, very early. So let's get back to this. You can see right here, the volume traded about 55 billion over the last 24 hours. That's pretty much on average with the market cap. That's pretty normal for cryptocurrency. Right here, Bitcoin dominance. Okay, out of that, let's just say a little over $1 trillion, 42% of that is Bitcoin. You guys see how heavily Bitcoin is in the crypto, market? A big chunk of this industry is Bitcoin. And then you have about 18.5% is Ethereum. So basically, 60% of the entire crypto industry is made up of two assets, Bitcoin and ETH. Okay? So if I am going to teach someone how to build a portfolio in crypto, a majority of our portfolio is going to be in Bitcoin and ETH. Does that make sense? Because they're the biggest movers, they're the first to market in a sense. They have the market share of the industry. Okay? And they're probably the most conservative picks in cryptocurrency. When I say conservative, that is not your normal conservative. This is not, your 401k, your CDs, bonds, Roth IRAs, mutual. This is aggressive, very speculative, very high risk market, right? But in this market, those two are the most conservative by far. Does that make sense? Okay. So when I'm building a portfolio, 60% of my portfolio is made up of, Bitcoin and ETH. So it could be 30-30, it could be 50-10. I don't even care if it was 60-0. I don't care. But 60% needs to be in those two or one of those two. Does that make sense? Everyone with me so far? Yeah. Okay? That's a smart thing to do. From here, and of course, none of this is financial advice. It's just my opinion, my education, the things that I do as someone who's been involved in this for a long time and has had a lot of success financially with it. Okay? From here, you can look at what's going on. Cardano's coming in at about 36 cents. DOT 660, Litecoin 91, Chainlink 764. For those of you guys hearing me say those specific coins, those are the coins that we've been dollar cost averaging into with our program, as we go on these sessions, every single, one of them on Mondays and Wednesdays, we go over that, okay? Those are the coins I've identified for the next bull market. Okay, coins that have great fundamentals, they're improving their technologies, they have a lot of updates, they're positioned to win. Also, big institutional money is in them, okay, and behind them. So that's why we're picking those ones. But the coins that we're dollar cost averaging into, so let me explain this to you. We've been dollar cost averaging virtually since the end of last summer, okay? The end of last summer till our goal was to this summer, okay? Our goal was to have 12 months to dollar cost average. And a lot of you guys are like, why is he doing this now? Well, we only get an opportunity once every 4 years to dollar cost average into crypto. You guys heard what I just said? So we won't have an opportunity, and we won't do the same thing till after the next bull market is over, which is going to end probably top out somewhere in 2025, mid-2025. And then we'll have a year of going straight down, and then we'll start the cycle over. And a lot of you guys are like, what are you talking about, going straight down? Okay, historically, Bitcoin, it's all off of the Bitcoin halving. The halving happens every single 4 years. And if you guys know what the halving is? Any of you? Okay. It's when the amount of supply put into production is reduced in half. It happens every 4 years. So right now, Bitcoin miners, you guys have heard of Bitcoin mining companies, right? It used to be a retail game when it started where people could do it at home. But they're big, big businesses today. Oh, guess what, guys? InvestView, the company that owns iGenius. What do they also own? A company called SafeTech. What is SafeTech? A Bitcoin miner. Okay? You guys didn't even know that, right? So you learn things, okay? But right now, 900 new Bitcoin come into the world every day. Right now, 900 a day. So Bitcoin actually inflates every single day, which is actually bad for supply and demand, right? Because there's more of the asset coming into the market. The unique thing about Bitcoin, though, is there's eventually a max supply of 21 million. Does that make sense? Okay? So right now it's inflating. Next March, we're projected for March next year, okay, we will have the halving, okay? When the halving happens, instead of getting 900 new Bitcoin a day, you get 450 new Bitcoin a day. That's a supply shock. A very big supply shock, guys, okay? And for miners to even be profitable, like right now, most Bitcoin miners need the price in the $20,000 range to make money. What do I mean by that? Because of their cost of power and the cost of the equipment. To run a mining facility, they need the price somewhere around $20,000, okay? Some of the great miners with, renewable resources and crazy types of energy that they're getting, they could probably do it at a cheaper price, but most of these companies need it right around 20 grand. Well, if the supply cuts in half next year, what does that mean? Well, they're going to need it at about 40,000 by next March. You guys see this? Because you're not just magically going to get power for a less price. Power's actually been going up in costs. So what do these Bitcoin miners need to happen? They need the value of the asset, probably towards the beginning of next year, to be somewhere roughly around $40,000 to make math of what's going on. And a lot of you guys would be like, well, that could change because if there's less people mining, it becomes easier to mine. The difficulty can adjust, which is true. But right now, every institution in the world wants to get a piece of Bitcoin mining. Because guess what? What is Bitcoin mining? It's the goose that lays the golden egg, right? Why buy the egg when I could buy the goose, right? Guess what? BlackRock over the last month has invested in 3 Bitcoin miners. They want a piece of the goose, okay? So understanding it's a very unique concept, but I want to explain that to you because the Bitcoin halving, which happens every 4 years, typically sparks about a 24-month bull market. What does that mean? It means the price pretty much goes, you're going to have, pullbacks, but it pretty much goes straight up for 2 years. If you guys were around in 2020 and 2021, what happened to the Bitcoin price, guys? You went from 3,000 at the low, from the Black Swan day, right, which was a pandemic. So everything just happened to get that low. It might have not got that low, but we got probably a few $1,000s lower than we should have because of that Black Swan event. We went from 3 to 70. You went from a $3,000 Bitcoin to a $70,000 Bitcoin in less than 24 months. Okay? This is important for you guys to understand because market cycles and what the big money does controls markets. With cryptocurrency specifically, they get extremely overvalued in a bull market and extremely undervalued in a bear market. We're in a bear market, okay? We're just coming out of a bear market. Historically, Bitcoin goes up 3 years, comes down 1 year. If you go look at it and you study it, okay? And it typically retraces about 85%. We didn't retrace 85% this time. We were only in the 70% range. 76, 73, somewhere in that range, that was the bottom at 15.4, okay? Why didn't we go lower? Anyone know? Now, there's actually a couple big reasons. So, November of last year, what happened? FTX blew up, correct? Okay? But prior to FTX blowing up, a lot of other companies blew up. Celsius, Voyager, BlockFi, we could go through them all, okay? Yeah, but Luna wasn't a company, but yes, Luna did blow up. That was right before basically all that cascade happened, okay? But what happened? You guys know on the day that FTX announced they were going out of business, everything that happened with that company, the price only went down a few $1,000s. A few $1,000s. Guys, typically the price should have went down $10,000. But what happened? All of the retail money that's in crypto was locked up in bankruptcies, so they couldn't sell. So it probably actually saved a lot of the retail customers. In 10 years from now, yeah, you might have lost some money in those platforms. Maybe you get 70% of your money back or 60% because of some of these bankruptcies. But most people would have sold all their crypto because they would have been panicked out of the market. It's kind of a crazy way of looking at it, right? Because most people, when Bitcoin hit $3, they were like, holy crap, we're rich. You guys know how many people bought at a few cents and sold at $3 and thought they were the biggest legends in the history of this world? Like, you could go look at old Twitter posts from people. I just sold at $30. It's over. Thank God. How do you think that person feels now? See, his 70,000 a coin. Feel like running out in traffic, right? That's a bad day, right? Okay? So the point I'm trying to make is understanding market psychology is important, and also investing, the most powerful thing is time. Time is your friend, okay? Especially in an industry that's set to 10x, 20x itself over the next 5 to 10 years. You guys understand, once this is a $10 trillion asset, you guys know gold is a $10 trillion asset. Bitcoin, right now, is a $446 billion asset. Not even a trillion. Can anyone do some math? What is Bitcoin trading at when it's a $10 trillion market cap? Okay? Okay, it's a big, big number. Go look at it. Some of you guys can do that math, right? Okay? It's a big, big number. So understand, we're in a very volatile market because it's not a lot of money. Money comes in, price goes up quick. Money comes out, price goes down quick, right? But this is where the opportunity lies. Volatility is our friend. You can't make money without volatility. You with me? Okay? When the market's just doing this, you can't make money. You want the market to have ebbs and flows. That's how you make money, okay? So right now, understanding the market psychology and putting yourself in a place to win, it's very, very important, okay? I want to go a little in depth on this stuff, though. So like I told you guys, right now, you guys can see there's 19,300,868 Bitcoin in the world. So we only got a couple million Bitcoin left, right? To ever be mined. You're not far away from that. Of course, it goes for a very long period of time because every 4 years, you're getting smaller and smaller, half the amount. Ethereum. Okay, you guys know my biggest holding is Ethereum. It's been for many years now. Why? Because Ethereum does so much when it comes to technology. Okay, so much. You could build things on it. Bitcoin didn't have that functionality. Ethereum opened up this world. In 2020, let's say the 2020 bull market, the summer of 2020 was fueled by DeFi. You guys heard of DeFi? Decentralized finance, okay? A lot of that was all because of Ethereum. Then 2021, when the market basically topped out, what was it fueled by? NFTs, metaverse stuff. What was that? Ethereum, right? Bitcoin wasn't making the market run. It was the things that were in the altcoins because of Ethereum, okay? That got a lot of new people into cryptocurrency. Ethereum, for you that don't know, it was a proof of work blockchain, exactly like Bitcoin, where you would mine it, right? Over the last year, it went from proof of work to proof of stake. Okay, now people run validator nodes. The same way NDAO works. People run validators, okay? Unique thing about Ethereum, I'm gonna pull this up for you guys. There are currently 122 million Ethereum in the world, okay? Ethereum used to inflate 4.3% a year. 4.3% a year, which isn't good, right? You don't want 4.3% inflation every single year. That's basically what the US dollar does, okay? Historically, your US dollar devalues about 4.5% a year. You guys know that? Any of you study that? That means your 100 grand sitting in the bank getting no interest is only worth, let's just say, 96 at the end of the year? 95, somewhere in that range? That was historically, okay? That's the last 50 years of data. Now you could talk about what happened in 2020 and 2021 where the government, well, not the government technically, the Fed, that's commingled. That's the same thing, okay? Okay? That all comes together. But what did they do? They printed over 40% of the US dollars in less than 2 years. 40% of all the money in the world was printed in 2 years. So now what happened over the last year? Oh my God, inflation's out of control. You idiots, you printed 40% of the money. So what do we got to do now? Oh, we got to raise rates to try to strengthen the dollar. Why did over the last year the US dollar kick every currency's butt? Because if you raise rates, what happens? It strengthens the dollar. The higher the rates go, you flush the liquidity out of the system. What happened though is so funny because we just had a market correction in 2022, right? Everything got crushed. Go look at your Tesla stock. Go look at your Apple. Go look at Facebook. Go look at anything. Everything was crushed in the financial sector, mostly across the board, okay? It's so funny, though, it played right into the Bitcoin cycle. Guess what? 2022 was supposed to be the year that Bitcoin retraces hard. It just happened that they printed all that money and they raised the rates in 2022. So weird, right? When was Bitcoin created? On an election year. When is the next halving, guys? Oh my God, an election year. What happens on election years with markets? They do really well, because if you're not doing well, you ain't getting reelected, my friend. Okay? So that's how these things work. So I want you guys to understand market philosophies and market psychology, because that's the biggest thing. See, I don't trade off of technicals. I trade off of fundamentals. That's what I'm looking at, right? I'm not looking at what it's doing on a daily, I don't care. I'm trading the big picture time frames, right? That's what I'm doing. So the point I was trying to make with Ethereum, it went from proof of work to proof of stake. It used to inflate 4.3% a year. Now it only inflates about 0.03% a year, but they built a mechanism into it where when you send a transaction, a piece of that transaction is burned and deleted from the supply forever. So Ethereum, since last year, when it went from proof of work to proof of stake, has actually been deflationary. So what does that mean? As the network gets more adoption and more people are transacting, more and more coins going to get burned. So right now, this number, right here today, you guys could take a picture of this and look back 10 years from now, that is probably the highest number of Ethereum you'll ever see. Isn't that pretty amazing? So over the next decade, even though Bitcoin has a max supply of 21 million, Bitcoin will inflate more than Ethereum over the next decade. So what does that mean for Ethereum's price in the next bull market? Also, what happens next month? Something called Shanghai. Okay? It's an Ethereum upgrade where all the people that were locked in basically the staking contract for Ethereum, all that money will start to get unlocked. Slowly but surely, it'll probably take 6 to 8 months to fully unlock it all. But about 10% of all the Ethereum in the world right now is locked because it was earning yield, okay, in the smart contract. What happens now when institutions know, starting next month, when this update happens, wait, we could just stake our Ethereum and earn about 4 to 5% a year on our money doing nothing. How much institutional adoption is going to come to Ethereum? Think about this, guys, logically. If I put $1 billion in and I can make 50 million a year doing nothing, 50 million? Every month I'm cashing out a few $1 million of clean cash? Come on, what are institutions going to do? A lot of money is going to go into Ethereum, right? Because it's not that, like right now when you wanted to stake Ethereum over the last year, year and a half, almost 2 years probably now, you were locked. You didn't know when you were going to get that money back. So a lot of people didn't do it, so only 10% of it is staked. Now when you know, hey, I could lock it and unlock it whenever I want, a lot of people are going to do it. They're going to fish for that yield. So I'm just telling you, in my opinion, out of Bitcoin and ETH, I believe Ethereum's going to do a lot bigger ROI. Not saying Bitcoin's bad by any means. You still want some Bitcoin in your portfolio if I was going to build it, right? But at the end of the day, ETH will probably outperform Bitcoin significantly over the next 24 months because of all those things I just talked about. Okay, there's a lot of reasons why people are going to get into Ethereum. From here, you guys know we are dollar cost averaging as well into Cardano, Polkadot, Litecoin, and Chainlink. Those are the coins that I've identified that we are building positions with for the next bull market. So if you guys have been doing this with me on Crypto Talks, you guys know some of our Bitcoin buys, because when I teach dollar cost averaging, we buy on a weekly, bi-weekly, or monthly basis, depending how you want to do it, okay? I buy every single week, okay? When you dollar cost average, what do? Okay? You take a small amount of money that will not affect your life in any way. It doesn't affect your life to pay your bills, do what you need to do. It's money that you would typically spend at the bar, right? It's money that means nothing to you, okay? Because we do not want to be emotionally tied to the money, correct? Okay? And we only dollar cost average in bear markets. You don't dollar cost average in a bull market. We're not going to run up our position, our cost basis, and keep raising it. So what do we do here? Well, we know the market's at its lowest point, which we predicted. I predicted that on the T, right? November, we were going to bottom out. I said, November, get ready. We're going to hit the low. We hit the low for Bitcoin. It was $15,400. Okay? Guess what? People that were in this group were buying Bitcoin on a weekly, bi-weekly, or monthly basis when Bitcoin was at $15,400 last November. Look where it's at now. $23,300. So guess what? They're in a very nice cost basis, right? And they've been buying consistently. This is basically the highest we've been, right in this range. Between the 23 to 25, that's the highest we've been. We topped out the other day at like 25,350, 25,400. That's where we've topped out at so far. Of course, we're going to surpass that significantly over the next 12 months. But that's where we're at. So every single one of the people that have been dollar cost averaging, they're up on pretty much every one of their buys so far. Does that make sense? Okay? But once Bitcoin gets over probably around $30,000 to $32,000, that will mean Bitcoin is actually over its realized price. Right now, Bitcoin is below its realized price. We only dollar cost average when it's below. Once it gets over 32,000, we sit back and we wait for your buddy a year from then to tell you to go buy Bitcoin, and we're selling our Bitcoin to your buddy. Just like Rob just said. See, timing's key in markets, okay? And understanding the market cycles. So guess what? If Bitcoin get over 35 today, I'm out the game. My dollar cost averaging is over. Let's enjoy the profits over the next couple years. Take money out as we go up. Does that make sense? Yeah. Okay. These altcoins that I've identified, of course, Cardano's created by Charles Hoskinson, another layer 1. Charles helped create Ethereum. He was one of the main developers in Ethereum. Polkadot, it's a layer 0, they would call it, but it's kind of like, it's an ecosystem that works with all blockchains. It's interoperable, very unique technology. It's more so here to help other blockchains work all together compared to competing with them, which is very unique. And the government actually considers Polkadot software, which is a very unique concept. Litecoin is a fork of Bitcoin. So Litecoin was one of the original forks way back when. Litecoin's actually been running for over 11 years now, guys. Litecoin is the only blockchain in the world that over the last 11 years has never went down one day. Okay? It's never went down, never shut off. Charlie Lee invented Litecoin. For those of you who don't know who Charlie Lee is, you use his products every single day. One of them is called Google Chrome. Okay? He also helped create something called Coinbase. Okay? He was one of the main developers early on. Okay? So very, very smart guy. And then we got Chainlink, and Chainlink is the biggest oracle in crypto. Price feeds data. It works with every project, okay? So now let's go over to what we've been doing, okay? This is our Coinbase trade. You guys see this was where we entered the trade right here? This is where we took our initial principal off the table. You see how I hit that pretty well right there? Beautiful area to take profit, okay? But we just took our initial capital right off. So let's say you started with 10 grand, got up to 20,000, we took the initial 10 off the table, okay? We're playing with house money now. I like to trade with house money. You guys like to trade with house money? Yeah. Okay? So, as you can see right now, we're a little down today. Why? Because Coinbase is very correlated to the price of Bitcoin. See, Bitcoin pulled all the way down to 22.5. Look at that. And it bounced pretty much hard back to that 23,000. Right on that line, as you can see right there. Very interesting. The thing with Bitcoin right now is we got to get over the 200 MA. The 200 MA is a little over 25,000. We get over that, if you guys haven't noticed, let's look at the dailies. You guys see this right here? We've been touching that all day, like the last week, right? Every day we were touching 25 and we'd get rejected right down. There's big resistance on the chart at 25K because you know if you get over 25K, about 25.5, guess what happens? You flip that 200 MA. You get on the other side of it. So instead of that being resistance, you turn it to support, and that's going to fuel a bull market. So there's a lot of people trying to hold it at 25. Like, don't let it get below there, or let it get above there. Does that make sense? That's what they were doing last week. Once it gets above 25.5, guys, you'll probably run really quick to 28 because there's literally nothing on the chart. There's no resistance between that. It's clear paths because that's how it broke up and down when it actually went through those areas. But looking at our Coinbase trade, okay? You guys see what Coinbase announced yesterday? You guys see this one? You guys can see this? You want a volume? But this is what Coinbase announced yesterday. Coinbase created their own blockchain yesterday. So it's pretty cool right here. It's called Base, okay? So you guys probably seen a lot of layer 2s on Ethereum, like Matic, you know, there's many of them, okay? Graph, Optimism, you could go, there's a bunch of them, okay? Basically, Coinbase has built their own layer 2 on top of Ethereum. They built their own blockchain. Why? Because you reduce your transaction fees, you can have quick transactions, and guess what this is? This is basically a product that Coinbase can make a few $100 million a year off of fees, on the network fees, and save you a ton of money in the process. Because instead of sending an ETH transaction where you're going to probably pay a significant amount of money, which you guys know as the ETH transactions go up, the gas fees get higher and higher, they built a layer 2 on top of it. You guys know Coinbase has 110 million KYC'd customers? So now, if they bring this technology into their ecosystem, and basically all the major projects that are built on Ethereum have already partnered with Coinbase. You could go look at them all, Matic, Chainlink, they all put out posts. It looked like, I don't even know how they kept a secret like that. Because they had 100 companies say, we partnered with Coinbase on this new blockchain. I'm crazy how no one got info and that wasn't leaked all over. But they basically created this. If you look at where Coinbase is, guys, just know every company that is a business that has, let's just say, a traditional business that has exposure to crypto, okay? Every one of those companies outperform Bitcoin. What do I mean by that, okay? This is Coinbase, guys. Oh, that's good. Cool. So Coinbase initially IPO'd at $350 a share, okay? It went up to about $420 that day, came down. It eventually, in 2021, November of 2021, when Bitcoin topped out at $70,000, it topped out at about $370 a share, okay? It went all the way down to $30 from $370, okay? We got in at 40, okay? We took our initial capital off at 80. Now we're just playing with house money. You guys realize when Bitcoin goes to 100,000, what happens to Coinbase, correct? You guys could all put this together, correct? Okay. The same thing happens with the Bitcoin mining companies. You guys ever heard of Riot or Mara? Any of these companies? You ever heard of a company called InvestView that owns iGenius? Their stock 80x'd InvestView the last bull market because they had a Bitcoin mining connection in one of their businesses, okay? What happened with Riot and Mara? They both did about 100x's, okay? Right now, Riot, $6 to $7 it's been trading at, okay? The low was about $330. Last bull market, $83 a share, okay? So understand the point I'm trying to make to you guys is everything that's in equities in the traditional, let's say stock market will outperform Bitcoin when Bitcoin goes up. Why? Because institutions can't always buy Bitcoin directly because of their regulatory reasons, and their compliance teams won't let them buy something that's not, let's just say, controlled by, licensed and, governments having regulation on it. They just don't have access to sometimes buy it. So if they want exposure to crypto, what do? They buy Coinbase, they buy mining companies, they buy these other things to get that exposure. And there's a lot more money in the equities market than there is in crypto, correct? We went over that. I just showed you one company is bigger than the whole industry. A lot more money's in equities than in crypto. So understand, those things will also happen. But yeah, guys, I can't go too much longer. They're going to yell at me. I could talk to you for like 3 hours, okay? But I hope you guys got a little something. You guys learned a little something? Okay, cool. A little something? I'll tell you guys, tune into my sessions. We only do 30-minute sessions. 30 minutes, that's it. 11 a.m. every single Monday, 30 minutes. Every Wednesday, 7 p.m., 30 minutes. I don't hold you guys for hours. I'm going to tell you all the information that I learned over the last few weeks in literally minutes. You don't have to spend time on the internet, it's all given to you, all the important stuff. And like I said, when I trade, and we make a lot of money when I trade, okay? Not financial advice, but that's what we do. The last 2 trades, the trade before the last trade was a Celsius trade. We only did 1 real trade last year. 1. But guess what? That trade, for some people in this room, they got 8x on their money, 10x on their money in a few weeks. Some of you conservatively got 3 to 4x, okay? Conservatively. So understand, we're not going to do craziness. A lot of it is dollar cost averaging and strategically setting ourselves up for the next bull market. But when there's trading opportunities, we take advantage of them. And the reason we didn't have a lot of trades last year is because Bitcoin went like this. We ain't buying stuff. We ain't getting wrecked. Sometimes it's better to sit there, stack our fiat, and get ready to enter the market when it's a good time, right? That's how you invest. So thank you guys. Have a good day.